Hello, everyone. I hope you're having a wonderful week. Today is October 5th, 2017. It's the fourth quarter market and retirement planning update video. Today's video is going to be a little bit shorter than previous, quite frankly, because there's just not a lot of information to share out there. Things are good. The economy's strong. The markets are performing well. Volatility's at near record lows. So I'm not going to over exaggerate or make information sound more important than it needs to. Let's keep everybody long-term focused and keep moving things forward. So as I go through today, as always, just like to remind you that we have a lot of media and articles that I've been quoted or participated in over the last quarter. You can view those on our website. You can view those on our YouTube channel or just search them. The reason I do these is really number one, I want to show my clients and just the community that I'm committed to my profession, committed to taking what I do very seriously, and overall I enjoy sharing our message. So we talk about the topics that have been happening most recently, or just more importantly, what we're going to talk about in this video is we'll talk a little bit about economic events, talk a little bit about the market itself, its performance, the valuations out there today, and then we'll just move on to some financial planning and general behavioral advice. So over the past quarter, there's not been a lot of significant economic activity. Quarterly GDP growth, which is the overall measure of goods and services produced by our country, was up over 3%. I believe that's the fourth time that's happened since 2012, so that's great to see. Volatility remains the lowest we've seen in nearly decades. Depending on the metric you use, you could go back even further. Interest rates, because of low volatility, because of good stock market performance, because of good economic activity, the probabilities of us seeing multiple interest rate increases in 2018 is becoming more likely. So we're definitely going to keep on top of that and see if there's any adjustments that need to be made because of this. And then lastly, with unemployment at near all-time lows, or I should say the lowest since 2000 at 4.4%, the backbone of our economy is a good, strong jobs market, and we're seeing that today. So these are great things to see. So we look at the performance itself, we're seeing very strong returns. We're seeing U.S. markets returning anywhere between 10 and 20% depending on the index, and we're seeing international and emerging markets 20 to 30% return. So this is fantastic for us. Many clients have said, well, why do we have international emerging markets? It just seems to be a laggard recently. Well, we don't know when that shift, when that rotation starts to happen. And so that's why we employ asset allocation and do those types of things. So it's great to see them definitely being a catalyst and a leader within our portfolios, which is why we're seeing such great performance this year. And then lastly, fixed income and bonds are really just doing what we always ask them to do. Be steady, be consistent, be stable within the portfolio, and we're seeing that again this year. So when we look at, let's go back to volatility. So something I want to point out on this chart is we can see the gray bars show the actual return of the S&P 500 year by year going all the way back to 1980. Now, when we go through that, we don't remember what happened throughout the course of the year to get to that point. This red line shows the actual drawdown or the decline that happened sometime throughout that year. So if we take, for example, if we go back to 2009, or sorry, 2008, even though the market was down 38%, there was a point where it was down 49%. So we go back to this year, we're up 13% on the S&P 500, but there's only been a 3% drawdown or correction at some point during the year. So if we go back and plot this, we'll notice that we have not seen this since 1995. Now also notice that this followed by some pretty good years in the market as well too. So overall, low volatility is usually a strong, positive piece of information and piece of news. So I feel very confident that this leads for good things to come. Then we look at valuations and metrics within the market. I think there's a lot of articles and news being said, hey, the market's overvalued, it's too expensive, et cetera, et cetera. But when we look at price to earnings ratio, which is the most commonly used metric, we see that, yes, we're definitely maybe slightly overvalued here, but nothing of major significance. We have to remember as investors that oftentimes emotions swing from one extreme to the next. Think about 2000 to 2009. We're also doing this in a very low interest rate environment. You could also make the case that should be one reason why valuation should be slightly higher. So with this being said, I think that the market values still continue to expand and we have great earnings, so those higher valuations are likely justified because of that. I shared this study last time, but I think it's worth reminding everyone of, and that's the fact that most people don't have a written financial plan. It doesn't need to be a 30-page report. It could be something as simple as 1 or 2 pages with some general rules. But remember, we create confidence, we create good habits by having things written down, reviewing and repeating them over time. And this is likely why the masses of the American population are undersaved for retirement. So if you haven't done so, if we have talked about it and it's not happened yet, I want to make sure that we're having that written plan or we're running those scenarios and stress testing different variables so that you can be best prepared for the future for your family. We're in a very low volatility environment, so there's no need to get complacent here. And as I'm saying here, although market volatility is at an all-time low, it seems like media hysteria, media volatility is at an all-time high, right? The Depending on a party affiliations or viewpoint, the news is becoming more and more polarizing, and so we need to take all this with a grain of salt. I mean, it's never been a better time in almost every measure to be a citizen in the United States. We need to remain optimistic. Overall, crime globally is at an all-time low. The economy is good. The middle class is strong. Goods and services, lifestyle, things are great for all of us. And so we need to remember that we can't get caught up in a lot of the negativity that's out there today. So with that being said, I wish you all a great rest of 2017. I hope you and your family are doing fantastic. I thank all of you for being trusting and loyal clients. I also thank those of you that have sent us referrals in the last quarter. And also remember, please don't keep us a secret. Thank you, and we'll talk to you soon.